In this video, we're going to answer the question everyone's asking. Once Bitcoin reaches $90,000, can we expect it to continue growing and surpass $100,000? Looking at this daily Bitcoin chart, we can see that it's within a macro upward channel we've been analyzing in previous videos. Notice how the price is currently at the top of the channel. It's ceiling. At the end of the day, you already know how price structure works, particularly how price behavior operates within a channel. If we stick to theory, buying happens at the bottom and selling happens at the top. However, let me tell you, this is not always perpetual. Often, and we're also betting on this outcome, the unexpected tends to happen. Frequently, these structures that price follows eventually collapse. Or, to put it differently, they stop being functional. It's not so much that they stop working, but rather that they're no longer useful. In such a scenario, we'd need to reinterpret or update our analysis. Theoretically, we can trade by buying the lows and selling the highs, knowing full well that at some point, the structure will collapse in one direction or another. What this tells us is that, under certain circumstances, we must stay alert. That's the reality. In Bitcoin's case, we've also observed a reaccumulation process. This happens when the price comes from an uptrend, and major institutions take time to reposition themselves for the long term. That's why we call it a reaccumulation process. If you're a follower of Crypto Insight videos, you already know that major institutions work with institutional targets. In other words, these players always know where they want to take the price. Think about it. If you're an operator at JP Morgan, it's logical to assume that if you're positioning long from February 2024 to November 2024, you've got a pre-established plan. They set an average price target, know how much they want to profit, and aim to drive the price toward that target. That's why institutional targets work and why we track them closely. For example, when they began accumulating in February 2024 during this reaccumulation process, they already knew where they wanted to take the price. This target, of course, can be exceeded, and we'll assess that in this video. However, it was clear they had a predetermined level. I encourage you to check out past Crypto Insight videos, maybe the last 3, 4, or 5. You'll see how we already had this institutional target marked. It's fascinating to witness the precision of this type of measurement. The argument I've just laid out is based on real market behavior, looking at a smaller time frame like 15 minutes. I've drawn a dotted horizontal line marking the target level. Notice how precisely the price reached that target and reacted to it. Truly remarkable. And if you're now asking yourself whether everything I'm saying means a crash is inevitable, let me tell you that, of course, it isn't. You'll understand why in just a moment, but first, it's crucial to analyze the context, the current macro situation of Bitcoin. To explain it clearly, buying spot right now makes no sense whatsoever. Even if the price skyrockets to 150,000 in the next 2 months, we'd still say the same thing. Buying here doesn't make sense. It doesn't make sense now, nor would it make sense in a hypothetical scenario where the price explodes to 150,000 in the near future. From a long-term perspective, considering spot investments, I think you'll agree with me that the price is overextended. If you've recently entered the crypto ecosystem, wondering if buying spot now is a good idea, the honest and straightforward answer is that it's not the best choice. However, this is precisely why, at Crypto Insight, we have a private community called Crypto Insight Premium. Here, we focus on the futures market, conducting intraday trading to seek daily opportunities. It doesn't matter if the macro, long-term spot perspective suggests this is a terrible buying zone. It makes no difference to us. For this reason, throughout this rally, our Crypto Insight Premium team has been seeking buying opportunities weekly, practically daily, in the futures market. Even now, we're actively identifying opportunities for buys, sells, and other strategies. It's essential to separate these two approaches: long-term spot investments and short-term speculation in the futures market. When I say that buying spot now doesn't make sense for the long term, that doesn't mean buying and selling in the futures market is a bad idea. Quite the opposite. The futures market offers opportunities every single day. I emphasize this to prevent newcomers to the ecosystem from getting confused. Once again, spot investing right now isn't ideal. We're said, here's something that may sound contradictory. We remain optimistic about the crypto ecosystem. We believe that, in the long term, the asset can continue to rise. Yes, we're saying we're optimistic and think the price will keep climbing. But at the same time, we're saying spot buying now doesn't make sense. And yet, we're also saying that buying in the futures market right now does make sense. For example, during this morning's live session with the Crypto Insight Premium team, we discussed buying opportunities emerging right then and others likely to arise this afternoon. Do you see the difference? Now, we're going to dive deeper into our thoughts on the long-term crypto outlook, leveraging insights from other crypto assets to cross-analyze and give you a firmer foundation for your own judgment by the end of this video. But first, welcome to Crypto Insight, your ethical and moral channel channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity. Here, you can see Ethereum's chart. As I was saying, we remain optimistic about the long-term crypto market. We believe cryptocurrencies still have room to grow, bringing happiness to many with these gains, of course. And hey, if you're wondering, going back to Bitcoin for a moment, if now is not the time to buy spot, when was it? Take a look at the videos we've published previously. You'll see how we identified this as a potential market low. You'll notice we anticipated breakouts from accumulation processes on 2 occasions. All of this was highly actionable. We discussed trap zones like these areas here and even right before the breakout in these zones. Now that I think about it, those moments were also actionable. What a word I just made up, right? But up here, when your gym buddy tells you, hey, crypto is booming, it's a party, that's exactly when you shouldn't be buying spot. It's too obvious. Everyone knows it. It's all over the news. Even your uncle, the know-it-all, has sent you a WhatsApp asking what to do. I'm sure of it. But let's get back to Ethereum and the long-term analysis. Zooming in a bit, Ethereum has been working through an upward accumulation process. It broke the creek with significant strength and reached its institutional target, much like what we discussed with Bitcoin. That's why we're seeing this reaction in its price. Now, if we expand Ethereum's chart to the 4-hour time frame, we notice it's part of a complex corrective pattern. This is something we've been actively tracking. From a pure risk to reward ratio perspective, it makes sense to bet on continued upward movement. However, returning to the focus of this video, long-term analysis. It all ties together. We're prioritizing the continuation of this specific zone here. If the first institutional target is taken out soon, it would also take out the point of control of this distribution. If Ethereum manages to clear the POG, the question becomes whether it has overcome its last significant obstacle on the way to revisiting its all-time highs. Now, keep in mind, we're posing questions and visualizing scenarios here. We don't have absolute certainty about what will ultimately happen in the markets. Neither us, nor your cousin, nor your know-it-all uncle. Remember that. Lastly, let's pay close attention to BNB. Looking at its daily time frame, this chart is incredibly promising. Remember, we've been experiencing a strong upward impulse that has been well protected by a macro defense zone. That structure has worked exceptionally well. An absolute masterpiece, as we discussed in the past. I also recall us talking about this compression phase and the day of the breakout. Who doesn't remember that? At least within Crypto Insight Premium, I'm sure many of our members do. We've been tracking BNB, among other assets, daily for over a year now during live sessions. Now, what we need to evaluate isn't just how it was defended, compressed, and then broke upward. Instead, we need to focus on how this impulse, which you're seeing here, is part of a complex corrective pattern. Look at the bearish impulse I've drawn for you. This is a W, this is a weak EI, and this is an aggressive Z. It formed a wedge, broke through it, and then came back to test the Z trend line, which was almost invisible and quite challenging to spot. I understand that for many, especially those who are new, this explanation might be difficult to follow, but let me tell you, be patient. If you watch our videos daily as we publish them, I guarantee your learning curve will be more than worthwhile. Without a doubt, you'll become much better analysts and traders than you would by following other YouTube channels that, frankly, just spout nonsense. That said, even if this explanation seems complex, you need to focus on the concept. The fact that this structure wasn't broken is highly significant, as it opens the door to a potential continuation of the prior bullish movement. Now, if we consider that we may be working within an upward accumulation process, notice this. We've already broken the creek and are now developing a flat pattern. The idea here is that this could lead to an upward breakout, giving us the reward for this entire accumulation process. As I mentioned earlier with Bitcoin, even though we're at the top of a macro channel, a terrible spot to buy, it's still possible to bet on a bullish continuation. As I explained earlier, these structures are made to break eventually. It's just a matter of time. When we compare this to BNB, we see a similar situation. The Z trend line failed to break, which suggests accumulation took place. They broke the creek and are now forming a flat pattern. Essentially, they're working on an ABC correction, setting up the ad leg to continue upward. In other words, there's a case for further continuation. Look at what's happening with BNB. This is precisely the kind of scenario we're speculating could unfold with other assets as well. On this daily chart, you can see a similar structure. There's a bearish impulse with its corrective pattern, AW W, a weak Y, and then a Z. The Zs was worked as a wedge, broke, tested its trend line, and then failed to break further. Now, notice the volume here. Also, check the negative delta aligned with bit below. In simpler terms, at that moment, we could see sellers being absorbed right in front of us, something we were already pointing out at the time. After failing to break the Z trend line, the setup for continuation became evident. Markets are fractal, and this is no exception. Let's zoom in a bit. Here we see a bearish impulse followed by a corrective pattern. A W, a weak I, and yes, a clear Z. What does this tell us? That in the crypto market, we are practically obligated to be bullish. It's not up for debate. The real question is, when will we stop being bullish? When the price structure gives us clear signals, specific reasons that we closely follow in the Crypto Insight videos. After a particular event, we'll know whether it's time to switch from a bullish stance to a bearish one. But as of today, it makes no sense to be bearish. Think about the key messages I've shared in this video. First, it doesn't make sense to buy Bitcoin in spot right now. Second, it does make sense to operate in futures, at least based on what we conveyed this morning during the live session we hold daily in Crypto Insight Premium. The third point is that being bearish in this market also makes no sense. Everything I've shown you supports this. We are in a Z that tried to break its trend line but couldn't. Look at the absorption that took place. It all leads us upward. The market is fractal, and we are seeing the exact same behavior but on a smaller scale. A bearish impulse followed by a W, II, and then a Z. Now let's look at the 1 hour time frame, and voila. Notice how this Z tried to break its trend line and failed. So ask yourself, what are we considering here? As long as we don't see key structures breaking to the downside, we should remain positive. The priority is bullish unless proven otherwise. Do you see how we're not trying to predict? Honestly, I don't care to guess the direction. After 13 years of experience in financial markets, you reach a point where things become very clear. I know what I want to see to determine how to act. I know what needs to happen to change my view and shift direction effortlessly. Trust me, that's how things work best. If you found this advanced technical analysis interesting, let me know in the comments. Give the video a like, subscribe to the channel, and click the bell so YouTube can notify you of future uploads. Don't get lost in this dark and often misleading path. Join us as we aim to shed some light in such a shadowy world. Until next time.